Hello, everyone. Well, it's afternoon where I am, so I'll say good afternoon, Sunday afternoon, and I'm just having fun here recording lectures for my intermediate accounting class at the University of North Texas. And so today's lecture will be about revenue recognition. It's the second lecture that I'm doing for revenue recognition. And in the second lecture, I work problems. I certainly enjoy working the accounting problems a lot more than walking through all the slides, and hopefully you do as well. I would recommend, as I work the problems, that as I put the problem on the video, you see the problem come across in the video, pause the video, you go work this problem on your own, because you really learn it when you work it. Work the problem on your own sheet of paper, and then come back, restart the video, and then see how I worked it. Now, if you got it right, hey, move on. I'm going to work 3 problems today. Maybe you don't need to do all 3, but I do believe there's, and the reason I do 3, very similar, I do believe there's some learning in redundancy. So you do all 3 of these problems. And for my students, you'll have an exam problem almost exactly like this. And so it'd be better to practice it now than when you're sitting in that intimidating exam after you finished a whole bunch of really hard multiple choice and trying to work through this and try to remember how to do it. So practice makes perfect, as they always say. I'm going to share my screen and get started here. And I do want to just remind you of the 5 steps to recognize revenue. We are not walking away from these 5 steps. We're going to identify the contract. In this case, it's not the manufacturer. We're going to build a building. The company's going to build a building that's going to take 3 years to build that building. We're going to identify the performance obligation. Well, it's the building that we're going to build for the customer. And there's not multiple performance obligations. And construction, we're allowed to say, hey, it's one building, and that's how that's going to work, just one performance obligation. We're going to determine the transaction price. How do we find the transaction price? Hey, guess what? It's in the contract. In the contract. And we're going to allocate that transaction price. That's easy because there's only one performance obligation. And so that'll be very clear. And then we're going to recognize revenue along the way. Now, keep in mind, in any construction contract, there's always going to be some interim billings along the way. So over the 3 years, the company that's building the building, they don't want to have to just borrow so much money to build that building. I guess they could, and that would just be included in a higher price for the customer. But generally speaking, there's some billings along the way. And so, we'll send an invoice, say, hey, pay us $1 million after year 1 or whatever that is. And that's already set in the contract. And so the customer may pay us a part of the price in year 1, year 2, and final, whatever's left over at the end of year 3 for this particular situation we're looking at. And I raised this issue around the billings because, remember, we are accrual-based accounting. We do not recognize revenue based on when we receive cash. That's just not how it works. We recognize revenue as we satisfy our performance obligation. Today, we're going to look at 2 methods. One is the percentage of a completion method, meaning that we will recognize some revenue every year for what percent that we got that performance obligation completed. So if we got 1/3 of the building produced, then we'll recognize 1/3 of the total price in year 1 in a 3-year deal. Now, in a completed contract method, it's somewhat easier, and is that we just wait till the whole building's done and we hand you the keys to the building, and then we recognize revenue at the very end. Both the percentage of completion and the completed contract methods are allowed by GAAP. And as you know, most companies, businesses want to recognize revenue as early as possible in their financial statements because there could be bonuses. For investors who might want to invest in the company, they will see those revenues earlier than later. So again, this is the last time we'll see this slide for this chapter, but I did want to make sure you're clear that we are not moving away from the rules. Okay, here is our first problem. And so if we look up here, the Westgate Construction Company entered into a contract to construct a new road. Well, it wasn't a building, I'm sorry, it's a road for Santa Clara County. The road was completed in 2023, so we're looking at this after the fact. This is just an accounting problem, right? Please provide the amount of gross profit recognized each year. That's revenues minus cost of goods sold, the journal entries that you're going to do each year, and then the amounts recognized on the balance sheet each year. Complete one version, assuming the percentage of completion method, and a second version, assuming a completed contract method. Here are the actual costs. And so we see that the actual costs each year were 2.4 million, 3.6 million, and 2.2 million. And we'll need the cost to complete, and we'll get into that in a minute. So really, we're going to be accounting for let's say 4 different things. One, the costs that we're incurring. And so here's our cost each year. Second thing, we're going to be accounting for the billings, because that's a separate thing than revenues, remember? And so that second thing is we're going to be crediting billings and debit accounts receivable because they owe us that money. The third thing, we're going to be accounting for just the normal, cash collections against that receivables. And the fourth thing, the one that takes the most time, the one that we care about here, because we're in a revenue recognition chapter, is we're going to recognize revenue, or what percent complete the job is done for building this road. And we'll look at that. I'll just, maybe I just briefly touch upon the fact, we're going to look at this, what percentage are we complete? Remember, we can look at the input or the output method. We're going to look at the input method. We're going to look at our cost. And so if this year we recognize 2.4 million, and we have this estimated cost to complete, then we can calculate, hey, what percentage are we complete in terms of cost incurred? And we'll assume that reflects, the percent that we've got done. And so we'll recognize a percent of the contract price based on what percent we finished. And we'll be doing that math. What's the price? 10 million. So with that, I'm going to get started working here. Let me pull up my visualizer, and I'm going to get this. You don't see this, but it's my little face and picture there. You may see a smaller version. So let's do our journal entries. So let's start here in 2021. And I'm going to just go down the line of these things. So what were the costs that we incurred? We incurred in year one, $2.4 million in costs. And so we put this in the construction in progress. And I'm going to abbreviate construction in progress as CIP. So I'll refer to it as the CIP account just to make it easy. And let's just assume they paid cash for those. And that was 2.4 million. And I'm going to round mine to millions just to make it easier for myself. Okay. Second thing they did, we billed the customer. I'm going to get to estimated cost to complete when I do the revenue journal entry. And by the way, the first thing is going to be percentage of completion, meaning I'm going to recognize some revenue every single year based on what percent I've done. And so if I was using the completed contract method for 2021, I would not have a revenue journal entry because that will be done after the building is done. So, okay. So I'm going to bill the customer, and I'm look down billings during the year, 2 million. So I'm going to debit accounts receivable with 2.0 million, and I'm going to credit this special account called billings. Now we can look at construction in progress. You see that's a debit balance. That's an asset account. We really have not turned, the road, I keep saying building, but the road, we haven't turned that road over to the county yet. We're working on it. So that's going to be an asset account. The billings account, this is kind of a new account. We haven't seen that before. It's pretty much unique to contract accounting. And so this billings account, that's a liability account. Like deferred revenue, we've received cash and we owe them a road. And we have part of the road built, so that's in the asset side. Later, you're going to see in contract accounting, we're going to net these two items into one line item on the financial statement. So if the CIP asset is larger than the billings, we'll have an asset, a net asset on the account, 2.4 minus 2.4. If the billings account is larger, we would take that minus whatever in the CIP account, and we would have a liability. Now we call these contract asset or contract liability. And we'll see this in action here in a few minutes, but let's finish the journal entry. And then finally, we receive cash, debit cash, 1.8 million, and credit accounts receivable, 1.8. Remember, this is an asset account. We increased it with that billing by 2 million, and we reduced it by cash received. All right. Fourth journal entry, and this is really the final journal entry, recognize revenue. If we were doing completed contract accounting, by the way, we'd be done for this year. By the way, too easy for the exam. In my exams, you're getting the percentage of completion method because I want to see your analytical skills. I want to see your accounting judgment along the way. So this, if you're in my class and you're watching this, I guess, too bad, so sad. You're going to be doing the percent of completion method. You'll thank me later. So revenues recognized. Okay, what percent are we complete? So costs to date, it's easy this year, 2.4. Cost to complete. Now these are estimates at this point. It's going to be the best estimate we come up with, and we get that in the second line item of my spreadsheet. If you look over to the left here, 5.6 million. So total project cost equal 8.0 million. Now, I'm going to pause here because if our total project costs are greater than our price, meaning we're going to lose money on this contract, we would recognize all those losses now, right away. As soon as we know there are losses, we recognize the losses. Let's look at our price is 10 million and our total project costs are 8 million. Therefore, right now, we believe we're going to make 2 million on this project. So we're just going to, account for it in a normal fashion. Again, if the total project was going to look like a loss, we would have to go record that now. Not true in this case. So what percent are we complete? We've had 2.4 million in costs divided by 8.0. Let me get my calculator out. 30%. Revenues to recognize equals the price, 10 million, times 30%. So we're going to recognize $3 million in costs. Now, what were our, revenues to recognize 3 million. What were our costs? 2.4 million. So we're going to have a profit of 3 million minus 2.4. That's an answer to one of the questions, 600,000. So let's go to our journal entry for revenues. We're going to have 2 debits every single time, just so you know. And I'll go ahead and do the revenue. 3.0, and I'm going to debit construction expenses. $2.4, and we're going to put the remainder, the gross profit is going to go in the CIP. And that could be a little bit confusing because normally gross profit would just not stay on our balance sheet. But in this case, we have not transferred the building over. And so we track this asset in terms of both costs and the profits that we've recognized. And you just have to kind of watch this play out to see It's almost like a tracking account that will eventually go to zero. Now, this is an expense account, 2.4, that will go to the income statement. So our income statement, we're going to have for this project, revenues of 3 million minus cost of goods sold, because this is really a cost of goods sold account of 2.4. Gross profit will equal 3.0 minus 2.4, 0.6 million. And that was one of the items that they were looking for in this problem. Now, balance sheet. Well, I know, first of all, we're going to have accounts receivable. That's really bad writing there, isn't it? I always do this. A/R is usually a term, a shortcut for accounts receivable, and that's going to equal 2.0 debit minus 1.8 credit, 0.2 million. And then we're going to have a contract asset. I'll do it like this, or a liability if it's a negative, and that's going to be equal to what's in our CIP account. Our CIP account is 2.4, plus we put another 0.6 in it, so it's 3.0. See where I got that? I debited CIP for the cost I incurred this year, and then again I debited it again with this 0.6 here when I did this revenue recognition journal entry. So that account, if we looked at a T account, it would have a 2.4 debit and a 0.6 debit, or 3.0 million in debits. What's in my billing account? 2.0. So minus 2.0. So it's a positive number, meaning I got a 1.0 million contract asset. And you're going to want to make sure you clarify whether this is an asset or liability if you're doing this problem for my exam. Just showing a positive number will not be good enough for me. I want you to clarify that that's a contract asset. Now, what I'm going to do next is I'm going to come back to my spreadsheet. I'm not going to, the one reason I'm not going to sit here and do the completed contract method, because so much of it is a repeat. And so I'm going to look at it here. Let's just go down, and here's my spreadsheet where I did this problem. And these are all the journal entries you'll see that I did in paper before. And again, if you're in my class, this spreadsheet is uploaded to Canvas. So you'll be able to see the spreadsheet. By the way, if you're in my class and you have the spreadsheet, here's the problem we just looked at, tab 1. Tab 2 gives you the answers. So you could just go look at that problem there, go work it on your own, and then clarify if you get it right or not. And these are, again, all the entries we just did, debit, you remember the debit, CIP, all these we did. There's that 600,000 of gross profit we recognized in the year 1. Same thing I just did on this problem. In the completed contract method, we'd have the same exact entries: debit CIP, credit cash, debit receivable for 2 million. This doesn't change. The only thing that changes is revenue recognition, and there's no entry. We look at here in our CIP balance, it's only 2.4, because we never did that journal entry that had the 0.6, 600,000 debit to CIP. And so we're going to end up with a different contract asset. And so the difference between the million and the 0.4, and the accounts receivable is the same on both sides. So if you look at percentage of completion versus completed contract method, nothing changes except the revenue journal entry. But because the revenue journal entry is missing, then your CIP account is going to have a different balance. All right, let's go back and now do year 2. Got to get my visualizer on. I do this in my class sometime, but no one can, and people yell at me there, but no one can yell at me now, since there's no one that's participating in this call. So 2022. So we're going to do the same journal entries. We're going to debit CIP and credit cash for the amount of cost this year. What were the costs in 2022? We see the 3.6 million there, and you know, and let's just go do that. 3.6 million credit cash, 3.6 million. The second entry, we're going to do a billing. How much is the billing? The billing is 4 million. So you're getting a bigger billing in here in this year. Again, where do the billings come from? The billings are negotiated between the buyer and the seller. And so that's listed in the contract. So when we look at the contract, there will be definitely, if you're building a road for a county, you're going to have a big monster 100-page contract, and all this will be laid out. And so the billings this year are 4 million. So we debit accounts receivable for 4 million, and we credit that billing account. Remember, that billing account is like a liability account. It's like deferred revenue. People pay us cash, along the way for a road that we're going to give them in the end of the 3-year contract. And finally, we collected cash, so debit cash. I hope you get that right. 3.6 million. And we're going to credit AR for 3.6 million. All right. Revenues to recognize. It's a little harder in year 2, just to note here, because now we got to remember this is all going to be cumulative, because some of these costs we incurred last year and some of these we incurred this year. So again, cost to date. Okay, we've got the 3.6 million from this year, but let's keep in mind, in last year we had 2.4. So it's only 2 years, so that makes it easy. 2.4 equals 6 million. So, and why do we use both last year's cost and this year's cost? Because we're looking at cumulative. How much of this building have we got done? How much we're going to recognize this year, we'll take cumulative in total minus what we previously recognized. I hope that makes sense to you. And again, you'll see that here as we do it. Estimated cost to complete. And I pulled that right off here in the line item. 2 million estimated cost to complete at the end of year 22 is 2 million. Total project cost 8.0. Now I'm going to pause here like I did last time. Are we going to lose money on this project? If we're going to lose money on this project, we'd have to go recognize all those losses now in our gross profit. And so our total costs now are 8 million, which I believe, let's see, that was the same as last year. So nothing has changed on that. We're still at 8 million and the price is 10 million. So we're still going to make 2 million. That's good news for the project manager and for the company. What percentage have we completed? Now at the end of year 2, it's 6.0 divided by 8.0, 75%. Total revenue, just say, the total revenue recognized equals 7. This is for both years, 75% times 10 million. So at this point, at the end of year 22, we need to recognize 7.5 million in total revenues for the project. And why? Because we completed 75% of the project, so we can recognize 75% of the contract price, which was 10 million. Revenue for current year equals that 7.5 million minus what did we previously recognize? Well, last year we recognized it the only year. This is the second year, so 3 million equals 4.5 million. So that's a lot of work, but we get to our revenue recognition journal entry. So we're going to debit construction costs. We're going to debit CIP, which is really our gross profit, if you will, and we're going to credit revenues. How much are revenues? 4.5 million. Construction costs, they were 3.6. And the difference, will go to CIP, construction in progress account. And then that'll all go away when we get done with the project. You'll see that here in a minute. So this is a line item on our income statement, 4.5 million. This construction cost is also a line item on our income statement. It represents our cost of goods sold as a construction company. So revenues of 4.5 minus cost of goods sold, 3.6. Gross profit equals 4.5 minus 3.6. 0.9 million. That will be on our income statement. And now we're ready to go do the balance sheet, because this problem asked for that. Now we're going to have to do a few T accounts here. We're going to need an AR T account. We're going to need a CIP billing account, and we're going to need a billing. Why do I need a T account? Well, because I had some balances in these in the prior year. Let's just go look at what those balances were. This was the first year. So I ended last year with 0.2 in AR. That's last year's balance. And then the CIP with 3.0 million last year, debit, because that's an asset. And I ended the last year with the billings of 2.0. Okay, let's just do all of our T accounts, and then that will clarify what should be on the balance sheet. Okay, AR started with 0.2. We debited AR to 4.0, when we did the 4.0 in billing, and we credited AR for 3.6. What's my final balance in AR? 4.2 million of debits minus 3.6 in credits. So my final balance in AR, 0.6. That does not look like a zero, does it? 0.6. That's why my spreadsheets are better if you're one of my students. You don't have to put up with my handwriting in those. So CIP started, we ended last year and started this year with 3.0. We added 3.6 debit. We added a CIP of 0.9, sorry. And so we're going to end with a CIP of 7.5. By the way, that is just a total coincidence that they are equal at this point. Total coincidence. And our billing balance is going to equal 4.0 this year. So $6.0. What's on our balance sheet? AR equals 0.6. And then contract asset or if it's a negative, it'll be a liability, equals 7.5 minus 6.0 equals $1.5 million contract asset. Just when I check, I have a cheat sheet. You don't get one for the exam, but I'm just checking my work because I don't want to have to redo this whole video again. And so there you go. That finishes year 2. I'm going to go ahead and do year 3 before I get into the contract, completed contract method. So let's finish that up. So 2023. Costs during the year were, and I'm looking at my spreadsheet again, 2.2 million. So I'm gonna debit the CIP account for the $2.2 million in costs, and we'll just credit, assume those were all paid in cash. And I'm gonna have billings, and debit AR, and credit my billings account. And how much is that? AR is 4 million again. So 4.0 and 4.0. Where am I pulling that up? Right from the spreadsheet here. I'm in 2023. And then we got, finally, we got cash collected. Debit cash, 4.6 million. And credit AR, 4.6. Now it's time for revenue recognition. Now, at this year, we finished the project. Look, there's 0 less to complete. So how much percentage complete equals 100%. And so we can recognize now, we can finish up. We can recognize all of our assets, all of our revenues, assets, 10 million. You know, revenue for the current year is going to equal that 10 million minus all that we previously recognized. And so what did we previously recognize? We recognize, let's see, pull my stuff out here. 2021, we recognize 3, so minus 3 million. And then how much do we recognize in 2022? 4.5 minus 4.5. So 10, 7, 10 minus 7.5. So this year, we'll recognize revenues of 2.5 million. All right, let's do our journal entry now. Again, same journal entry that we've done in previous year, although it's the last year. We're going to debit our CIP account. We're going to debit construction expenses for this year's portion. By the way, it doesn't matter which order you put these in. I know I've done it different ways. And we're going to credit revenues. How much revenues? We already calculated that. That's 2.5 million. And we're going to debit CIP. Well, we get that in construction expenses of 2.2. And so the remaining debit 0.3. Just, and again, I'm just making my debits and credits equal. 0.3 plus 2.2, that's 2.5, and 2.5 there. What's my gross profit? That's revenue minus cost of goods sold. Revenue 2.5 minus 2.2 in construction expenses, 0.3. All right. Balance sheet time. It's going to be pretty interesting. I'm just going to let you know. Let's look at AR, CIP, and billing. So AR, again, got to go to my 2022. Let's see where we ended. AR, I'm pulling up the sheet that we did for 2022. AR ended with 0.6, so that's how we started this year. CIP was at 7.5, and billings was at 6.0. Let's look at this year's entries. CIP, well, we'll do AR first. I'll put that in. AR is 0.6 plus 4.0, and then a credit of 4.6 for the cash that we received, this journal entry right here. And so I've got 4.6 in debits and 4.6 in credits, 0. That makes sense. We're at the end. We've collected everything. CIP 7.5 plus the 2.2 here, plus my 0.3. That was, it's hard to see this here. This was my journal entry right here. Debit CIP for 0.3. 7.5 plus 2.2, 9.7 plus 0.3, 10.0. Billings, 6 plus this year's 4.0 credit, and I've got billings of 10, CIP of 10, balance sheet, 0, no balances. Final entry, we got to close these accounts out because the project is done. So we're going to credit that for 10 so it can go to 0. And we're going to debit this for 10 so it can go to 0. The final entry, and don't forget this on exam. That would be so easy to do. Don't do it. Please don't do it. So I'm going to debit billings. I'll have to, minus some points for that. Don't want to because it's so easy. And guess what? We're done. We just did 3 years of accounting for constructing a building. I've never worked in a construction company, but I've always thought that it would be, pretty interesting work. So now let's go back and look at the completed contract method, because it'll be interesting now as we get to that 3rd year. I know we never looked at the 2nd year either. So let's look at the completed contract method. So we looked at the 1st year. So the 2nd year, again, all the entries are the same. We're debiting CIP and crediting cash for our construction costs. We're debiting AR and crediting billings. The billings, your customer doesn't care if you're taking percent of complete or completed contract. Percent of complete or completed contract are only about one journal entry. That's the revenue journal entry. How much are we going to recognize in revenues? And we don't do a revenue entry until the contract is completed. Now, the fact that we don't do a revenue entry means that we don't record this debit to CIP for $900,000. So our CIP balance always includes just construction costs, none of the gross profit along the way. So at the end of year 2, we had a 2.4 million CIP balance. We debited it for 3.6 here, if you follow my little plus sign there. So we have 6 million in the CIP account. In percent of completion method, we had 7.5 million because we debited CIP in that revenue journal entry for some of the gross profit that we made. We left it in there before we closed it out. And the billing balance, that doesn't change, that's 6 million. So here, since the CIP balance and the billing balance are exactly the same, 6 million, there's no contract asset or liability. It's a 0. AR doesn't change. Now, last entry, last year, all again, for our construction expense journal entries, no change from percent of completion. AR and billings, no change, don't care. How much cash we receive, entries exactly the same. Those are not revenue related journal entries. But here's our revenue journal entry. We're going to recognize now 10 million in revenues. because now the road is complete, it's finished. By the way, if I said building along the way here, just assume I meant road. I keep thinking this is a building example and it's a road. So if I say building, please forgive me, use it synonymous. I should just say the asset, but we did build a road here. And so here we're going to recognize the entire contract price at the end of the contract. That's why we call it completed contract method at the last point in time. And we'll recognize all of our costs of construction, which represents what's in the CIP account. What was in the CIP account? 6 million right here. In total, at the beginning of the year, we added 2.2 million more in the CIP account. And so that was our total cost of construction, 8.2 million. I mean, another way to look at it is, what were our total construction costs? Actual costs each year, 2.4 plus 3.6 plus 2.2, 8.2 million. And so what is our gross profit, by the way? It's $10 million in revenue that goes to the income statement, minus our cost of goods sold, 8.2 million. So our gross profit is 1.8 million. Now, in this last entry, we take, we do debit CIP for that gross profit. So we really get to the same place in the CIP account, 10 million. And at the end, before our final journal entry, we have 10 million in CIP and 10 million in billings, no contract asset or liability. And we finally just, wash those out, just like we did here. So because the billings account has a $10 million credit balance, we take it to zero with a $10 million debit. The CIP account has a $10 million debit balance. We credit it for 10 million to take that account to zero, and we're done. Now note, here we made $1.8 million in gross profit recorded at the end of the contract, $1.8 million. How about if we added all the gross profit for the 3 years in percent of completion method? 1.8 million. So the total revenue recognized has not changed. It's just timing on that. All right, let's go. Problem number 2. You guys are making me work here. And this is problem number 2 here. And maybe I can go through it a little faster and do less talking. Now, what you should do right now, if you're watching this video, and I would say either if you're confused or you're confident, go pause the video. I've got problem 2 right here on the screen. Go work the problem. You can pause the video in a manner you can still see that. And you go do all the journal entries for 2021, 22, and 23. Then when you're done, got all your sheets of paper out, watch me work it, and then you can see where you might have missed. And with that, let's go to work. 2021. Debit CIP for the cost during the year. So I'll do this one in thousands. And credit cash, we had to pay for those construction costs. And then we had billing, so debit AR. We billed the customer for $3,150,000. Credit billings, remember this is like a deferred revenue account. Oh, you know what? I'm sorry, I did not turn my visualizer on. There we go, you got it. And we're going to collect cash, so we're debit cash for $1,500,000. Boy, for some reason they're not paying us. We billed them paying us. They better get on that. And credit AR for $1,500,000. Revenue recognized. Now our performance obligations, how much did we complete those in the year? Cost to date, $350,000. Cost to complete, $3,150,000. 150. Total cost, $3,500,000. Pause here. Is that less than our contract price? We see here, contract price, $4.5 million. So it's still a profitable contract. If it was not, we would recognize all the losses we anticipate having, and we record them now, and we'd have a negative gross profit. You obviously do not want to be in that circumstance. Percentage complete, 350 divided by 3,500 equals 10%. How much revenue to recognize? Equals 10% of our price. We've got 10% completed, 10% of 4,500,000 equals 450,000. Journal entry, debit CIP. I'd go ahead, even if you're doing an exam, you can just write these down because they're never going to change, the line items on here. You know, we'll recognize 450,000 of revenues. Construction expenses were 350. We need a debit. The difference between our debits and credits goes in the CIP, and so that's 100. Gross profit equals 450 minus cost of goods sold of 350, 100,000. Balance sheet. AR equals, I don't need a T account because there's only two items, 3,150,000 minus $1,500,000. Oh no. You know what? I am so sorry. I knew there was something that seemed funny about that. Billings were 2 million. I'm sure you guys were yelling at me out there in the internet land. AR was 2 million. Billings were 2 million. Does that screw me up anywhere else? No. See, I keep a little cheat sheet. I don't want to stop the video and re-record. Back to problem one, that would be so crazy. So AR equals 2 million minus $1,500,000 credit for cash paid equals 500,000. And then do I have a contract asset? Or maybe if it's a negative, a liability. Remember, this is going to go right to the balance sheet. If my CIP account's larger than my billing account, I have a contract asset on the balance sheet. If my billing account is larger, I have a net liability on the balance sheet. So we look at these. So my total CIP account, let's do that first, is 100 plus 350, 450 contract asset minus billings. So we got really large billings minus 2 million. So look at this. We've got a negative 1,550,000 equals 1,550,000 contract liability. So that's different than the first problem we worked. We've got a big contract liability. We must have had, if the contract, it almost looks like we just barely started this project. We only finished 10%, but we're able to build them based on a contract for 2 million out of the 4.5 million. And some construction companies will do that because they got to go buy a lot of materials up front. Not even that's really not that bad here. So it's interesting. They got extra cash in front, but that's why it's a liability. They've collected $2 million but they've only finished $350,000 of work, 10% of the work from a cost perspective. So therefore, it's like a deferred revenue. This is the economic substance of this is truly a liability, and the accounting reflects that. All right. Next, 2022. Debit CIP for construction costs. They were $2,050,000. Credit cash. Let's see what's next. Billings. Let's get that right this time, Mr. Rumbo, Mr. Roy. Debit AR for $1,500,000. Credit billings for $1,500,000. How much cash did we collect? And credit AR for $1,500,000. Revenue recognition percent. I won't do the percent yet. Let's just do cost to date. We had $2,050,000 this year. In the second year, and how much do we have in the first year? We had $350,000 in the first year. So plus $350,000 equal $2,400,000. Cost to complete, $1,200,000. So total project cost, $3,600,000. Complete equals how much we've done today, 2,400 divided by the total cost that we anticipate. So 2/3, 66. So now we only had 10% of the project done last year. Now we've got 66.6% of the project revenues. Revenues to be recognized in total equals 66.6% times $4.5 million. Let me just get my trusted calculator out. Equals $3 million. All right. What do we need to recognize in revenues? Revenues for current year, that equals what we should have recognized in total for the 2 years minus what we recognized last year. How much we recognized last year? $450 minus $450. So this year we'll recognize $2,550,000. All right, journal entry time. Debit CIP, debit my expense account, the construction expenses, and credit revenue. Well, that's what we just calculated. Revenue is $2,550,000. My construction expenses, $2,050,000. My CIP account's a difference, which is going to be $500,000. I'm just getting my debits and credits right. Gross profit equals 2,550,000 minus 2,050,000 equals 500,000. That ends up on my balance sheet. All right, I have to do some T account time. I'm running out of space over here. Let's see if I can get this all in here. But I want to go to the second page. AR, CIP. Always a little harder in this second year. So AR, let's see what I started out with last year. I ended with last year, which is where I started. I ended last year with 500,000 in AR. So let's end of 2021. And I ended with CIP of 450 last year, and that was the contract asset. That's CIP 450, which was the 350 plus the 100. So I started with 450 last year. And my billings last year, remember, they were really big, 2 million. So let's post, I guess, this year's journal entry. We're doing some real accounting here. So we debited AR for $1.5 million, and we credited AR for $1.5 million. So how much we were paid? Well, you know what? Oh my God. I hope you guys are hanging with me. I picked up the wrong number there because cash collections during the year were $1,750,000. Live on national television, global TV, YouTube. I don't, too many people watch. I won't be famous for making all these errors, but you know what's great? I detected my error. I have some controls to detect my error, and I have corrected it before we get through this entire video. So what's my balance in AR? It's 2 million minus 1,750,000, 250,000, because we're trying to come up with the balance sheet. AR equals 250,000. All right, how about CIP? CIP, we have a debit of 2,050,000. And don't forget this other debit we did down here for 500. So now we have 3 million in the CIP account. No credits there. 450 plus 2,050 plus 500, 3 million. How about our billings account? There's only one journal entry for that, 1.5 million. So I can still see that my billings account, which is the liability, is greater than my asset of account 3 million. So I'm still going to have a contract liability. So I like to follow the same process. Get it right. So if it's a negative number, it's going to be a liability. That means my assets are smaller than my liability. In other words, we don't put CIP account on our balance sheet and the billing account on our balance sheet. We just call it, that would be a little bit meaningless for most users of the financial statements. We want to say we've got a contract asset or a contract liability. If you think about it, contract asset means I have done more work than I built. You know, so it's an asset because I've got more cash coming in later. If I receive more cash than how much work I've done, then, you know, I owe people doing more work, you know, it's a liability. And in this case, the numbers are minus 500. So it's a $500,000. And this is what I want to see. I don't want to see a minus 500. I want to see a 500,000 contract liability, because the question asks, what's on the balance sheet? It's a contract liability of 500,000 on the right side of the balance sheet. All right, moving on. Last year, 2023. Debit CIP for the work performed. I'm looking at my little arrow there, 1.2 million. Credit cash 1,000,002, debit AR, credit my billings. My AR balance is another million, right? I'm pulling it right off, make sure I get that right. And I'm going to debit cash. And credit AR for 1,250,000. Revenue to be recognized. Easy in this year because we're 100% complete. 100% times 4.5 million equals previously recognized. So if I go back to last year, we had recognized 3 million. We had in total. We did 2,550,000 in year 2. We did 450 in year 1. That was the 3 million that we had to recognize on a cumulative basis last year. So again, I'll say it this way: that 3 million represents the total from 2021 to 2022 that we recognize, and now we get to recognize the rest of it. Revenue current year equals 1,000,005. All right, debit CIP, debit the cost of goods sold account, construction expense, credit revenues, 1,500,000. My construction expenses, what were they? They were 1,000,002 this year. The difference here goes into the CIP account, and my gross profit equals 1,000,005 in revenues minus 1,000,002. Where is that gross profit? That's on my income statement. That revenue line is on my income statement. That cost of goods sold is on my income statement. Balance sheet. All right. AR, CIP, billings. AR, we ended last year, pull these over, 250. CIP ended in 3 million. And billings ended in 3,000,005. It's funny how those look all slanted on the screen here. Well, I guess because they are slanted. I'm writing it from an angle. And so let's just post our journal entries. We had 1 million more in billings into AR and 1,250,000 in payments. So 1,250,000 in debits, 1,250,000 in credits, 0. So we billed everything else and we've collected everything. That's good. CIP, 1,002,000. And then we got our other little 300,000 here. So here, 4,500,000. Billings, 1 million. Nothing. We got a 0 in accounts receivable. Our contract asset is 4.5 million. Our contract liability is 4.5 million. Nothing on the balance sheet. Final entry. Don't forget this. I'm just going to credit this for 4,500 and debit this for 4,500. Why? Hey, we're done with this contract. Take this contract to 0. We're going to start some new ones. We'll take care of those. But let's do our final entry. So I'm going to debit billings, 4,500,000, and credit CIP, 4,500,000. Done. Here you go. Moving on. Problem number 2. This is now, this could be an all-day video. It's not going to be because it's Sunday. I actually have to go work in the yard today. And I do go to church. I've been to church, and that was great. Let's see, I'm going to get the problem 3. Okay. I don't know how much faster I can go because it takes time to write these, but I'm going to go pretty fast on this one. Yeah, make sure, when I go fast, I make mistakes. And that is an issue in any exam you take in my class or another class. You want to go at a good methodical speed. You don't want to go too slow because you're going to run out of time when you have to do 3 years of contract accounting, I guarantee you. All right. Still making that same road. I hope I'm not saying buildings anywhere because I keep thinking I should change these, for my class when I do it in class and make it into a building because I keep saying building probably. So 2021 debit CIP. What were the costs in 2021? 2 million. Credit cash 2 million. Okay, we're gonna do some billings. Billings are 2 million also, just like our cost. That's interesting. Totally a coincidence. There's no relationship there in the real world or not. And we're going to collect cash. 1.8 million. Credit AR. AR goes down with the credit because they've now paid off some of those billings. Revenue. We're just trying to get to how much of our work have we done? How much of our performance obligation have we satisfied? What percent? We're using the percent of completion method here. And so we've got $2 million in cost to go. Cost to complete the job are estimated at this point at 3 million. Total project cost 5 million. Pause. Are we going to make money on this project? The contract price is 6 million. Total project costs are estimated at 5 million. Hey, we're fine. We're fine. No need to go record all the future losses now. Percentage complete based on our cost. 2 million divided by 5 million, 40%. Revenue to recognize equals 40% of what? Our price. One little past there. What's 40% of my price? 6 million. Or 2.4 million in revenues. Journal entry, debit CIP. We'll go ahead and write these. Debit our cost of goods sold account, which we call construction expenses. Credit revenues. 2.4, and our costs were 2 million. And CIP to make the journal entry balance out 400,000. Gross profit equals 2.4 million in revenues minus 2 million in cost of goods sold. 400,000. It's the same 400 because that gross profit gets reported into our construction in progress account. Balance sheet. We only have 1 year here, so we've got 2 million in debits minus 1.8 million in credits, 200,000. Contract asset or liability. This is a negative. We're going to subtract the liabilities from the assets. The assets are CIP of 2 million. Plus we put another 400,000 in there, so 2,400,000 minus our billing, 2 million. It's a positive number, so I have 400,000 as a contract asset, right to the balance sheet. Rolling on 2022. Hopefully you guys are getting good at this by now. If you're still hanging with me, 2022. Debit CIP for our costs in 2022, again, 2 million. Credit cash, 2 million. We're going to do some billing. How much are we going to bill? 2 million also. And we're going to receive some cash, credit cash, debit cash, credit AR. How much cash are we going to collect? 2 million one. That is not good. For whatever reason, this did not change to 3.9. We'll just assume they were able to do that. So for some reason, we collected more cash. We got a negative balance in accounts receivable. I'm going to continue on. I guess that could happen in the real world sometime, but we're going to, let that play out for right now. Revenue to recognize. Okay. Cost to date. 2 million CIP this year versus 2 million last year. 4 million. Cost to complete. $1 million. Total cost. And I think that's the same as we were at before. I'm looking for 2021. Yep. Total project costs last year were 5 million, and we're still sitting at 5 million, and we're still profitable on the project. Percent of revenue to recognize equals 4 million we've done versus 5 million to complete equals to 80%. Total cumulative revenue at this point at the end of 2022 equals 80% times the contract price of 6 million equals 4.8 million. How much have we recognized in revenue? So revenue this year, let's just see, revenue current year equals 4,800,000 minus what we recognized in the previous year. What did we recognize in the previous year? We recognized 2.4 in the previous year minus 2,400. We're going to recognize again 2.4 million this year, actually just like we did last year. So it's very similar kind of entry. And our entry is going to be, so we've got debit CIP again. We're going to debit construction expenses. And we're going to credit revenues. Revenues, 2.4 million. And we'll debit construction expenses of 2 million and the remainder into CIP. There you go. Oh, gross profit, 2.4 million in revenues minus 2 million in construction costs, 400,000. What's going to be on our balance sheet? With a sharper pencil here. Let's do our T accounts over here. All right. So AR, let's just see what we had last year. Last year, we ended the year with 200,000. So we got 0.2 there. Last year, we ended with a contract asset, CIP of 2,400,000. And we had billings of 2 million, last year. All right, let's post our entry. So we had 2 million of AR minus 2.1 of credits. So we got 2.2 minus 2.1, 100,000 or 0.1 million. CIP 2.4 plus 2 million. We're just doing some posting here like a normal accountants here, plus 400. We've got 4,800,000 in CIP. Billings 2 million plus another 2 million, 4 million. Do we have a contract asset or a contract liability in the books? Well, we got more assets, contract assets, and we have contract liabilities. So yes, we've got a contract asset equal to 4,800,000 minus the liability of 4,800,000. All right, I've been losing energy. It's a lot of work in one, even for an old accountant like me. So maybe because I am old, but anyway, hopefully you're catching this by now. And so let's do the last year of the last problem. Woohoo! That's probably how some of my students will feel on the exam. So 2023, get our cost in, debit CIP, that's the account we put our cost in, 1.2 million, and credit cash. Again, I'm pulling this right off the spreadsheet, the information here. And I've got, I'm going to debit my AR and credit my billings for 2 million. And I'm going to receive some cash of 2.1 million. And credit AR for 2.1 million. Revenues. Well, in this last year, it's easy. 100%, 4.5 million. Oh, no, the price was 6 million, sorry. Equal. Revenues. Previously recognized. How much we recognize? Let's go back to 2021. I recognized 2.4 million, and 2022, I also recognized 2.4 million, so equal 4.8 million. So revenues for the current year equal what I need to recognize, 6 million total contract price. I'm 100% done, minus what I previously recognized, 4.8 million, $1.2 million. All right. Easy stuff. Oh, let's go do our revenue journal entry. Not ready for gross profit yet. So we're going to do debit, CIP, debit, construction expenses, credit revenues. The revenues are $1.2 million. My construction expenses, hey, by the way, also $1.2 million. Not making money this year. 0 on the CIP account. No, no entry there. Gross profit, $1.2 million in revenues, minus $1.2 million in expenses, 0. So really wasn't a good year. We finished up with the rest of the revenues with the full cost. And, you know, let's see what our total cost for the project were. Well, they ended up being 5.2 million, our total cost, as we'll see here in a minute, because I'm just adding 2 million plus 2 million. So last year we expected to be at 5 million total cost, 2 plus 2 plus 1. We ended up in actual cost 2 plus 2 plus $1.2 million. So this year we had some issues, maybe some cleanup issues or whatever. It cost us more than we anticipated. Last year we only thought we had $1 million left to complete the project. It took us $1.2 million, and so that gross profit, you know, makes sense. You know, now we're still in total gross profit for the contract in positive terms. So, you know, 800,000, I think that is. So now, balance sheet. To do our T accounts. So the AR, let's go to 2022. We ended up with 0.1 in AR, 4,800,000 in CIP, and 4 million in billings. Post our entries, $1.2 million in the CIP account. And then here was 0, so we're done on that one. AR, let's go finish AR, 2 million. Well, I'm putting this in different, I'll do it this way. I had this in millions and this one in thousands, so I'll change that. And so then we did 2 million here. Might be harder to switch gears if you're just watching this versus doing it. And then we collected 2,100,000. 2,100,000 in debits, 2,100,000 in credits, 0 AR. That's good. It means we billed them the entire price of 6 million. We collected the entire price of 6 million. That is awesome. That doesn't always happen. Just so you know, we'll try to say there were some problems. We end the CIP with 6 million, and then we add this journal entry here, 2 million for billings. And balance sheet, nothing on our balance sheet. Final entry, clean out our accounts. We got to put $6 million credit to take this to 0. We got to put a $6 million debit in billings, take that to 0. So debit billings and credit IP for 6. And so there you go. Now I've worked on 3 problems for you. And then again, as a reminder, this was a percent of completion method. If we were doing completed contract method, we would not have had this journal entry here in 2021, no revenue recognition journal entry. So the CIP balance would have been different. We would not have had a revenue recognition in year 2. We'd have done it all in year 3. And so this would have been 6 million, 5.2 million, and 0.8. So all the construction costs would come in here. We finish up the CIP. We'd end up in the same place because you still be at 6 million and 6 million. And we would recognize the same gross profit in either method in total. However, we would recognize in percent of completion method, we would recognize some revenues and profits in 2021, some in 2022, and the remainder in 2023. So with that, man, that's hard work. So I did 3 of these. I don't know how long it took me, but again, if you're in my class, you'll be doing a percent of completion method on my exam, very similar to these problems. And I do believe there's some value in just redundancy, working the problem. And then if you end up in a construction company, you're doing this accounting, it's actually pretty fun accounting. I would really enjoy being in a construction company. I worked mostly in manufacturing companies, which was similar, but not big, gigantic fun projects like a road or a building or something like that. So with that, I'm signing off, and I just thank you for your time, and I wish you the best of luck on contract accounting. Thank you.